Well, hello traders and investors. I'm LA Little. This is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts, and we're using that information where we have test as significant price points to tell us what to do next. If you listened into the show last night, you heard me say at the very end of the show, as a result of what we saw in the sectors, not the indexes, that we should see some sort of an attempt to pull back today, and that's exactly what you got, folks. I don't make this stuff up. I don't have any crystal ball. I simply look at what the market is telling us. Use the neoclassical model that I built a decade ago to call these markets day by day. And if you watch me for any period of time, you know that I call these markets fairly accurately most of the time. And if you want to learn how to trade, you want to learn how to invest, protect yourself in down markets, make money both ways. I don't know how to say it any other way. Come over, hit the join the community, or at least come in here and read these various scripts here that will tell you what we do and how we do it. And it's a one-on-one session with me at the very beginning to teach you how to get started and how to use all this stuff effectively. And then we have a mentoring program that you can join as a member and make yourself profitable. Quit giving your money to the market, right? Give it to the community at least, and let the community help you. As far as what happened in these markets, it was a down day, not a huge down day, but I expect you're going to see some more tomorrow, and I'll show you why. You got the NDX down about 1/3%. You had the Russell down about almost 2/3%. The broad NASDAQ almost 0.5%. You had where's the S? Not the S&P. Yeah, there it is. The S&P was flat, right? Just slightly up. You look over in Europe, it was pretty much red. Same thing elsewhere. The big moves to the top side were oil, bonds, gold, silver. All the things opposite to the markets. Let's look inside this and see why I'm saying that more than likely we're going to see some more pressure applied. We'll start here with the daily chart on the S&P 500. Now, the good thing for the bulls is that you made a high, you got under, but you had more volume, right? So volume came into this market today. And if you touched higher, you can test again, and that looks like that's a good possibility. But if we move over to the other indexes where it wasn't such a nice move, you had bearish engulfings here on the NASDAQ, about equal volume. On the NDX, you said the same thing, right? Bearish engulfings there. And if we go over the Russell tested down into a swing point high. Now, you got to look back in the context of what's been going on here. If you remember, let's still kind of review history. If I'm going to go back to a monthly chart, the Russell was the one last year, right? The end of the year was the one that led the markets up with a huge spike off that bottom and a straight up move. And that was right up until the end of the year, and it closed somewhere right in there, right? So a straight up move off the Russell. That was the lead index. And then the Russell kind of went sideways, and has been going sideways now since the beginning of the year, 2 months. I mean, it's up, but it's not up nearly as much as the others. The others played catch up and then started to lead. And which one started to lead? It was the NDX. And so if we pull those charts up, and I'll just bring the weekly over, you can see how since November the NDX has been the leader, or at least not since November, but since the beginning of the year, the NDX has been nothing but up. Now you got a little doji taking place this week. Tomorrow's Friday. And so the lead indexes now appear to be softening some. And those indexes that were lagging, in particular the Russell, are starting to try to roll back over first. Now the Russell was the last one this year to make a new high. Here's the high that it made. It got over it right there. It was suspect. In other words, didn't have as much volume as it went over it. Gets up, comes back, tests into it. What does it do? It expands volume as it tests into that swing point high. And what did it also do? It did a full retest, regenerate off that swing point high. And when I say full, that means that it got into the bottom third of that area. So somewhere down in here, that's where it got. That to me is a full retest. In other words, you're down into that area that you expected to go. But it pushed more volume. If it pushes more volume, that tells me that more than likely this thing, well, not more than likely, but there's a good probability that this thing is going to try it again, going to try to break it down again. And so this index is trying to lead to the downside again. Now the good thing is that you got a lot of swing point highs you broke on the way out. And so you got a lot of retest regenerates. But if you break a retest regenerate, the probabilities turn, and that is it says that more than likely instead of this, you got this at best potentially going to that. And so that's the danger here. This is the one that's trying to roll, and then we'll go into those index sectors, which is where we looked last night, you know, to come up with the ideal that, hey, well, maybe this thing is going to try and pull back today. Okay, so let's start with the things that are bad in terms of the sectors. So I'm going to shoot through some of these and show you what I'm looking at. So let's start with the home builders. So home builders yesterday did a failure, right? They did a test of the high and they failed on less volume. That's a test failure. That says you should try to pull back. That's exactly what it's trying to do. Then we go to some of the others that you may not think are as important, but you know, they have been strong sectors. IYT, bearish engulfing. And just like I just talked about here on the Russell, you've got a retest regenerate there and also one here, broke through both of them. That says that what was up is most likely not up, but sideways at best and potentially going to go lower. And in fact, this one already did. There's the swing point low, and there's the change in trend that took place today. And this is actually an upgrade of what we've had. We upgraded our databases over the weekend, or actually it was on Monday, I believe, to allow us to take all of the derivative data that you see on the chart, redraw all these zones and everything by the time I speak to you at night. And so it's not the next morning, so members now can get updated charts about 3 hours after the close of the market, which is pretty nice. And so now we have updated charts, gives you a lot more flexibility in monitoring what you're doing, you know, in the evenings instead of having to wait for the next morning, because some of us work 2 jobs. So that's the IYT. Now, if you go longer term, and this is going to be the rub, right? If you go longer term, you know, it doesn't look that bad, right? Because here you have a breakout over this swing point high, and you're just doing the bullish retest regenerate. The fact that you come back within 6 bars says that you're probably going to try to get into the bottom third. And so what that means is that more than likely what you're going to see is you're going to see this thing try to push down into somewhere down in this area. Maybe just a little bit lower if I were to draw it quite correct. That's the transports. Now, if you go and look at any of these that I'm pointing out, all of these have failures. And they're not exactly failures, but they're negative signals tonight. This is the SOX, right? The SOX comes back in to a retest regenerate. It's pushing it with volume, right? What does that say? It says it's going to try again. Got into the bottom third, did a full retest regen, pushed volume, compared to this swing point high, and compared to this breakout bar. And so from that perspective, that says, hey, it's going to try it again most likely. So that's a negative. XLI also. Now the industrials have been one of these hottest sectors. You got a bearish engulfing, right? And this is going to come back into this swing point high. And then if we look at, what was the other one? XLY, I believe it was. Let me look at that one. XLY also gave you a bearish engulfing today. Now these are not like, you know, crash type stuff. But this is telling you that what we talked about last night is actually happening. And that is that those weaknesses that we identified and said, hey, these markets are going to struggle, they in fact did. Now let's go to the good stuff. IBB, right, the biotechs, they come into the swing point high, do less volume, flip around, do a hammer. That was going to try and push higher. And then if we go to the XLK, Now these are the two heaviest weightings here. Technology, still hanging at the highs. Financials, still hanging at the highs. Largest weighting, that is what's keeping this market up. That's why the S&P was flat versus down. This is the link that has to hold if this market's going to hold at these higher levels. If these start to roll and they come back to do the retest regen, whole market's going to take a bigger step down. What do we think it's going to do, or why do we think it is going to do it? Well, I showed you a number of sectors versus the two that are still holding it up. But if we go elsewhere and look a little bit closer, what led today? XLV, XLU, XLP, TLT. Go down the list, folks. Those are all safety sectors. That tells me the money's rotating to something safer. They think something's going to happen. If you look at the VIX is refusing to go down. And so there's a lot of things pointing to the probability here, or at least the expectation that this market's going to try and trade lower. So that's the way it looks tonight. I expect you're going to see more pressure tomorrow. XLF, XLK, those are the key links. Watch those if you want to know where the market is going to go. And if you really want to learn how to trade, folks, you know, I spent I don't know how many years learning this myself. Now, if you want to learn it that way, that's your business. If you want to learn it from somebody that knows what they're doing and can teach you the ropes, and you don't have to learn all the stuff in the school of hard knocks, it's a lot cheaper to learn with me than it is to let the market teach you. Have yourself a great night. Good night.